Welcome to this video showing you how to use the key figures worksheet in your workbook. The first figure you want to enter here is the retained profit or loss brought forward from last year in your accounts. Now you'll find that on your financial statements in the balance sheet section. If we have a look at a sample set of accounts, this is Jones accounts. If we go down, there's our balance sheet, abbreviated balance sheet. We've got in this case abbreviated accounts. But under capital and reserves, which is the second part of your balance sheet, you'll see a figure for profit and loss account. If that's a positive, it means you've got a profit, and if it's a negative, it means you've got a loss brought forward. So you want to put your retained profit loss brought forward from last year. If we haven't yet done your accounts, you may have to put in a draft figure there and change it later. And the reason that that's important is because if you've got a loss brought forward, you're not going to be able to declare a dividend until your profits this year are enough to offset that loss. So let's say we've brought forward a loss of 2,317. This can often happen in your first year of trading. Then it asks for your corporation tax losses brought forward from last year. Again, if we haven't done your accounts, this will have to be an estimation. It will be different from your retained loss, and you'll find that on your corporation tax computation. And if you don't know where to find that, just ask us and we'll help. And again, that's important because it goes towards calculating your estimated corporation tax for the year. And remembering this is only an estimate of your corporation tax, but at least it will give you an idea as to how much you have to pay. So let's assume that we've got corporation tax losses brought forward of 3,500. We then start filling in the sales to date and profit to date for each month. So if we go into zero, you want to run the profit and loss account, which is under reports. The one we recommend is the compare periods. Pick up the date that you're looking at, the month we're looking at. So in this case, we're looking at April. Period doesn't really matter, but 1 month is quite nice to see, as long as you've got the show year-to-date figure here, because it's the year-to-date figure we'll be picking up. So we've got April there. Our sales for the to date are 416.67, which is that figure there, and our profit to date is 329.05. So 329.05. Now, at the moment, we haven't offset that loss, so we wouldn't be able to declare a dividend. And until such times as that figure there is greater than 2370, we won't have enough profit to declare a dividend. Let's just put that retained profits down to a little positive, and let's just take the corporation tax losses out. So it's a little bit more like it probably is in your accounts. Now we've got this cell, I need to increase my profit by. This is just to take account of any big expenditure you know is coming through, because what we don't want to happen is you declare a dividend based on a profit this month when you know you're going to have a big expense next month which is going to more than offset that profit. In all likelihood, you probably won't have anything to enter here, but if you know you've got a big expenditure, so for instance you're going to be buying a lot of stationery, say £2,000 worth of stationery, then you would need to reduce your profit here. So we know, the worksheet knows you haven't got the money to pay a dividend out, because otherwise what could happen is you declare a dividend here, and then next month you have that big payment in, you get a loss, and actually you shouldn't have declared a dividend at all. If you're flat rate VAT accounting, you may want to put your profit on your flat rate there. You would do that once a quarter, depending on what quarter that you account for your VAT, and you would get that from the bottom of your VAT return. But you probably only need to worry about those figures if they're fairly large, and again we're talking probably hundreds and hundreds and not sort of in the low hundreds. The same with depreciation charge. If you've got a lot of fixed assets and you have a large depreciation charge, again a couple of £100 or more a month, you want to put that figure in there. You can find that again from your profit and loss account. It will be under your operating expenses. You'll see your depreciation to date. And if you've made a lot of fixed asset additions during the year, again you want to enter those in, and we're talking about hundreds and hundreds of pounds worth of additions, not just the odd laptop or the odd printer. And where would you get your fixed asset additions from? in Xero, you would look at your balance sheet and you would compare. So we're looking at April 2015, and you would compare to the last year end. So the difference between what your fixed assets are, and they would be under the asset section if you had any, so your computer equipment, plant and machinery, office equipment, motor vehicles, the difference between your figure for 30th April 2015 and what it was at your previous year end, that will be your additions figure. Going back to the profit and loss account, if we run that now for the next month and complete the next month, we'll go to compare periods. Instead of April, we're now in May 2015. Again, the period doesn't matter as long as we've got the show year to date selected. We'll update, and here we are, year to date now. Sales are 1250.01, so here it would be 1250.01. Don't need to worry about the pence if you don't want to. And profit to date is 1077.63. 1077.63. So that's our year to date profit, and you can see it's come from our April and our May profit here. And the difference is, if we didn't compare with any periods, so we took that away, we would just see the 1 month and the year to date. But you want to put your cumulative figures in here. It's your sales to date, your profit to date. So that's how to complete the key figures, and in the next video we'll look at how to complete the dividends workbook.